Could tariff-induced uncertainty have hit US jobs growth? Non-farm payrolls data is out later today and it's forecast to have increased by 130,000 in April. But in March, that figure was almost 100,000 more. The likely slowdown in US jobs growth comes as economic uncertainty is on the rise as a result of President Trump's aggressive trade policy. Vicky Price is Chief Economic Advisor at the Centre for Economics and Business Research. Vicky, how importantly do you think today's non-farm payrolls will be treated by policymakers at the Federal Reserve, especially with a rate decision under a week away?
I think they're going to be an indication of the mood of the nation, if you like, and businesses. And we've already seen there have been a number of surveys suggesting that hiring intentions are being cut quite significantly because of this uncertainty on the tariff front. We've also got, of course, additionally, the issue of when do we start counting all those federal employees who have been told they're losing their jobs, but so far haven't quite made it into those figures. So that's something that will happen next, unless anything is reversed, of course, in that area with Elon Musk's likely departure. So there is a lot of uncertainty out there. And of course, the tariffs, and particularly what is happening with China, is a major block in terms of intentions to expand and hire. And there is an awful lot, of course, of discussion right now as to where certain production may be happening, not coming back to the US, but necessarily because of those tariffs, but moving to other countries out of China. So we've heard that from Apple, for example, and there'll be lots more of that. So they are going to be very important, and they are going to influence the decisions made by the Fed when they meet next week.
So, Vicky, are you with the majority that don't expect a rate cut next week?
I'm not absolutely certain, because if you look at what's happened in the first quarter, of course, we've seen that there's been a reduction in GDP in the US. Admittedly, if you look at the annual rate, which is 0.03%, well, that's not exactly huge, but nevertheless, it does indicate a stagnation there. And if you look at the data for April, if you look at the PMIs that have come out, the Purchasing Managers Index figures, they suggest that manufacturing is certainly suffering, and even services are now seeing a much slower growth. So it's come back really to just growing in that area. So that's not good news for the economy looking ahead. But of course, the Fed will be worrying still about inflation. And I think for the moment, they're probably going to hold fire and wait, which of course isn't going to please Trump particularly. But the economy is definitely showing signs of a slowdown. So that would mean that even if we don't get a cut next week, we'll get a cut pretty soon.
Well, let's turn to Europe now, and Eurozone inflation held steady at 2.2%. That's not far off the 2% target, but there are reasons for policymakers to still be nervous, aren't there?
There are, and that is, of course, once again, to do with growth. You've seen, of course, a bit of recovery in the first quarter in GDP in the EU. What you're seeing, though, now, again, is partly because of the tariffs. What happened was that the industrial production sort of geared up and loads of exports to the US in anticipation of those tariffs. So a lot of inventory build-up that happened in the US because of importers sort of trying to avoid those extra costs. But in reality, if you look again at April data, which has just come out, it suggests that manufacturing is still in contraction territory, perhaps not as much as was the case before, but not doing anything very much at all after the initial sort of a little bit of a pickup that we saw in the first quarter. You see services actually also are slowing down, which is a worry in Europe, because that had been an area of relative growth in some countries. So forecasts for growth in the EU are being revised actually downwards. But of course, if interest rates come down further, which I think they will, then perhaps there will be some rebound. And there's a huge amount of effort being put by both the Commission and individual governments in terms of supporting their economies with extra spending, extra budgetary spending. So let's see how that develops. But yes, I think we may well see more cuts happening in Europe, and possibly in an accelerated way. Yes, inflation has stayed steady for the time being, but deflationary worries are still very much in the ECB's minds.
So you talked there about interest rate cuts. So should we expect one starting in June?
Yes, I think we may well see another one happening. The ECB has been ahead of the curve, and I think actually they've done the right thing. If you look at some areas, for example, mortgage lending, which in some countries seems to have really picked up, and people saying, I'm very surprised about this. but actually it's because interest rates have come down so significantly. So looking ahead, those expectations of low rates are still there, very solidly put in the minds of the market and priced in. So I think we are going to see more cuts coming.
That was Vicky Price from the Centre for Economics and Business Research. And don't forget, you can watch more videos on Reuters.com.